Well, U.S. investors could be in for another wild ride this morning after new turbulence in global stock markets. China's Shanghai Composite closed down again overnight, more than 1%, but Tokyo's Nikkei picked up around 3% in their trading session. Stocks in London and Germany are trading about 1% lower.
The Dow surged higher for most of Tuesday after China cut interest rates, but the rally faded and the index took a major turn, closing down 205 points or more than 1%. It marked the sixth straight day of losses for the Dow, totaling 11%. Anthony is CBS News senior business correspondent. Anthony, it was interesting to watch this. Why don't you think that rally held yesterday?
Well, that was the big question yesterday morning when the market opened so much higher was, is this going to hold? And the fact that it didn't tells you there's still a lot of anxiety over there.
About China.
About China, about interest rate hikes, about oil prices. I mean, whenever you see a market hit, go down 1,000 points as it did Monday, typically it goes back and it tests those lows again, which may be what we see, in the coming week.
Explain exactly what's happening in terms of China, in terms of they won't take our exports now and how it'll just
here's the important stat, okay? 80% of the world's growth comes from three countries: China, India, and the U.S. When China's economy slows, and it's still strong, but it was double digits a few years ago, now it's down to 7%. We don't have a lot of transparency there. Some people think it may be 5%. That means they're buying less from other countries around the world. Those countries then can buy less from us. So the whole global economy slows. What's happening now is the market's trying to process that and say, where are we?
It's a giant loop.
It's a giant loop.
Yeah, right.
It's going to make that Chinese president's state visit to the U.S. even more interesting.
And when is that? That's in just at the end of September.
At the end of September. Yeah. So we'll be watching that. Thank you very much, Anthony.